Hello and welcome to the news update on Value Chain TV. My name is Memona Bagodo. And on the news update, the arraignment of suspended Governor of the Central Bank of Nigeria, Godwin Emefiele, over alleged 6.9 billion naira procurement fraud has been stalled due to the absence of the second defendant who was said to be indisposed. After presenting Emefiele in court, the Director of Public Prosecutions DPP, Mohammed Abubakar, informed the court that the second defendant, Mrs. Ramalan Yaro, is indisposed and asked for an adjournment to enable the prosecution to present the defendant in court for arraignment.
Now they brought another charge before the FCT High Court, a 20-count charge against the same person, against the same embattled governor of the central bank, and one other person. Now, the matter was meant for arraignment this morning, but two things played out, which clearly showed that the complainant itself was not ready for the arraignment. The second defendant was not made available. The second defendant was not in court. And it is right that all the defendants in a charge must be present to take their plea. And consequently, the complainant on its own requested for an adjournment for the arraignment to be done at a later date. And so we didn't oppose that application. The arraignment will now come up on Wednesday, 23rd of this month, Wednesday 23rd. That's exactly what happened.
Responding to the request for an adjournment, Mr. Emefiele's lawyer, Akinlolu Kehinde San, requested to have a brief audience with Mr. Emefiele, which was not opposed by the DPP. The Nigerian National Petroleum Company Limited has secured an emergency 3 billion crude oil repayment loan that's geared towards stabilizing the naira. NNPC Limited, in a statement in Abuja, stated that it secured the crude for cash funding from African Export-Import Afreximbank headquarters in Cairo, Egypt. The full report. The Oil for Cash loan is meant to support the naira as it continues its free fall and also stabilize the foreign exchange market. The NNPC Limited and Afreximbank have jointly signed a commitment lecture and term sheet for an emergency $3 billion crude oil repayment loan. The signing, which took place on Wednesday, 16th August 2023 at the bank's headquarters in Cairo, Egypt, will provide some immediate disbursement that will enable the NNPC Limited to support the federal government in its ongoing fiscal and monetary policy reforms aimed at stabilizing the exchange rate market. The agreement for the loan saw the Group Chief Executive Officer of NNPC Limited, Malam Mele Kyari, sign for the National Oil Company, while Dr. John Elimbi, Executive Vice President, Afreximbank, signed for the bank. This is the fourth transaction being consummated. This is the fourth transaction being consummated among NNPCL and Afreximbank during the last 3 years, in addition to efforts to consolidate the mutual relationship between the two entities. Both Nigeria and NNPCL are shareholders in Afreximbank, with sole reason of improving investment and developing prosperity in Africa. The deal is coming approximately 17 months after the NNPCL secured a $5 billion investment commitment from Afreximbank to finance important investments in Nigeria's upstream sector. The Nigerian Economic Summit Group says Nigeria will experience stronger economic growth in 2023 as firms' new orders, output growth rate, and inventory activities increases. The Chief Executive Officer of the NESG, Mr. Laoye Jayola, stated this at the third edition of the Mid-Year Review of 2023 Economic Outlook organized by the Chartered Institute of Bankers of Nigeria, Center for Financial Studies in Lagos. Rema O has the full details.
The NESG boss revealed that Nigeria's private sector performance is notably responding favorably to the current policy posture of the new government. He said purchasing power revealed that there is a likelihood for stronger than expected economic growth in the remaining parts of 2023 as firms make new orders. He predicted that the initial policy stocks might increase inflationary pressure and worsen the cost of living crisis if not properly managed. Jayeola said that the convergence of foreign exchange market rates would reduce currency risks, adding that the new policy regime would stimulate investors' confidence in the economy. The NESG chief also noted that monetary policy interest rates would likely rise until the end of the year, citing that initial policy stocks from foreign exchange rate convergence and petroleum subsidy removal would heighten the cost of living. He noted that this act would push more people into the poverty bracket as higher inflationary pressure would erode purchasing power of many households. In a remark, the chief consultant at Adedipe Associates Limited, Dr. Biodun Adedipe, urged the federal government to learn from countries that had gone through similar problems to get the economy back on track, adding that there are countries Nigeria can learn from, citing the Netherlands, Saudi Arabia and Malaysia, which have the same currency trouble because of supply, just the same way Nigeria is having today. Adalbi Rema reporting from Value Chain TV.
Nigeria's petrol imports from Europe have fallen by about 48% since the removal of fuel subsidy in May. The demand for premium motor spirit has dropped to 106,000 barrels per day in July from 205,200 barrels per day in May, after local petrol prices skyrocketed following President Bola Ahmed Tinubu's announcement. Patient Chat Moses has the full report.
According to data from S&P Global Commodities at Sea, total refined product demand has fallen 41% in the same period. A World Bank estimate indicates that scrapping the long-standing subsidy could save Nigeria as much as 11 trillion naira in 2023, providing relief to a growing government deficit. The report said that sinking Nigerian demand, driven by high fuel prices, has also led to a drop-off in demand from European exports, whose refiners had relied on thirsty West African markets. According to the report, the subsidy removal has shaken up long-standing arbitrage for European refiners. While Nigerian demand in particular has diminished, other destinations have picked up the slack. The U.S. Atlantic coast made up 28% of total petrol exports from the Amsterdam, Rotterdam, Antwerp region in July, amid persistently low stock, according to the Kepler shipping data, increasing its share of the low teens, almost in tandem with shrinking Nigerian demand. As a result, European refiners have been unfazed by sinking demand in West Africa. The report revealed that European traders already faced being crowded out by Russian refined products that have flooded into Africa, including Nigeria, since the onset of the war in Ukraine saw European countries boycott Russian oil products. Moses Patient Chat reporting for Value Chain TV.
Oil marketers have appealed to President Bola Tinubu to reintroduce petrol subsidies like Kenya did due to the severe adverse effects of their removal on the well-being of the citizens. Hawa Aliyu Palasa completes the report.
While President Tinubu has firmly rejected fuel price hikes and the reversal of fuel subsidies, petroleum product marketers have pointed to the case of Kenya as a lesson to learn from. They highlighted that Kenya reintroduced petrol subsidies due to the severe adverse effects of their removal on the well-being of its citizens. The secretary of the Independent Petroleum Marketers Association of Nigeria in Abuja, Suleja, Muhammad Shaibu, said Kenya, after experiencing the harsh consequences of the removal, recently reinstated the subsidy for 2 months. Shaibu emphasized that government's responsibility lies in prioritizing the welfare of its people and being receptive to feedback. He said it's baffling that Nigeria, an oil-producing nation with 4 refineries, is forced to rely on imports due to their non-operational status. From the moment the government announced subsidy removal, Shaibu continued, "We anticipated these challenges." He added that the repercussions are now palpable as foreign exchange rates largely influence the cost of petroleum products. Given the hesitancy among marketers to import products, Shaibu said the government should urgently consider a temporary relaxation of subsidy removal, arguing that even though the Nigerian National Petroleum Company Limited has previously stated that petrol prices would not rise, the commodities cost could surpass the current 670 naira per litre if the trend of increasing exchange rates persists. He remarked that prudent approach will be to gradually ease subsidy removal considering the escalating value of the dollar. National Public Relations Officer of the Independent Petroleum Marketers Association of Nigeria, Chief Chinedu Ukadike, said that an abrupt elimination of subsidies would inflict significant hardship and that these concerns was raised well before petrol subsidies were lifted. He said removing subsidies without implementing compensatory measures is a matter of concern. Ukadike explained that the prices of imported goods, including petrol, will continue to rise with the strengthening dollar. Overall, oil marketers are urging a cautious and considerate approach to subsidy removal, considering the broader economic repercussions and potential hardships it might impose on the population. Hawali Alessa, Value Chain TV.
The Nigerian Content Development and Monitoring Board and the Anti-Corruption Agency of Nigeria conducted a sensitization workshop on achieving zero tolerance for corruption in the workspace, with focus on the types and potential consequences of corruption as well as appropriate safeguards. The full report. Declaring the workshop open, Executive Secretary of the NCDMB, Engineer Simbi Kesiye Wabote, commended ACAN and its parent body, the Independent Corrupt Practices and Related Offences Commission, for extending the anti-corruption campaign to ministries, departments, and agencies. Engineer Simbi stated that the initiative has been warmly welcomed by the NCDMB, which has set up its own unit called the NCDMB Anti-Corruption and Transparency Unit to express its support and endorsement of the campaign. The Executive Secretary, who was represented by the Director Monitoring and Evaluation, Mr. Akintunde Adelano, pledged the board's continued support for the anti-corruption campaign and urged all staff to make the most of the workshop. ICPC Chairman Professor Bolaji Owasanoye thanked the NCDMB management for its principled zero tolerance of workplace corruption and for its support of the committee's anti-corruption efforts. He recalled that earlier this year, NCDMB ACTU was fully involved in a similar week-long awareness-raising workshop organized by the Commission in Abuja. Maimuna Bagudu, reporting for Value Chain TV. And that is all for the news update on Value Chain TV. My name is Maimuna Bagudu. Thanks for watching.